Think Realty Nation, it's your host, Abhi Golhar. Welcome to the Think Realty Podcast. Have a really awesome show lined up for you today. My guest today is Ray Urrutia. We're talking about buying and selling notes and what that means for your overall portfolio and what it also means to be the bank. You know, we've heard about that term a couple of times and I've read about it a lot, but what does it really mean? What impact does it have on your investing activity? And how can we use notes to potentially diversify the investment activity that we currently have going on anyway? For many of you flippers out there and also rental owners, there are a lot of other options that you can also be diversifying your activity into. Maybe notes could be one of them. We're also talking about a recent ATTOM data report about how flipping rates are surging, but profits are slipping a little bit. So we'll talk about that here in a few minutes. And how do you find an investor-friendly real estate agent? Those can be difficult to find, but I have a couple tips for you. Let's get the show started. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. So Ray Urrutia from Pull the Trigger Enterprises is a good friend of mine, and he's been buying and selling notes and being his own bank for quite a while. We'll have the opportunity to connect with him and ask him a little bit about what it means to be buying distressed notes and what he's doing to reperform these notes, what it means to be the bank. I think it's a really good concept to integrate into our investing strategy moving forward. So let's talk to him. Here we go. And Ray, welcome to the show. How are you doing, sir? Good to see you.
Doing fine this morning. We have some dry weather here in Chicago, so everything's good.
All right, good. Yeah, Chicago generally gets a little dry weather. I think it's, they call it the Windy City for that specific reason. So give me a little background on who you are and what you do.
Who I am is, I've been in business for about 40-some years, and primarily in sales and marketing. And I've been an entrepreneur for the last 20 years in various types of businesses, from communication to real estate to fuel to technology. And over the time, I found that real estate and what it can do for you and can do for others. So where I'm at today is trying to educate other people to get involved in real estate, to be able to change their lives on one hand, and the other hand, I think in our country we're very poor in teaching people alternative ways to enhance their lives, either through wealth, either through growth, either through experiences. So today, with Pull the Trigger Enterprises, I actually started 5 years ago, and I had some students. And when I'm fast forward in time, I actually wrote a book on it, and that's available. And then at the same time, looking at, as you were stating, how do you make that change? How do you make that leap?
Absolutely.
And I know that Abhi, you do a fantastic job of doing that too. At the same time on LinkedIn and some other sort of services out there.
No, it's a lot of fun. I mean, we do talk about the leap. We do talk about just making that jump from where you are now to where you want to be in the real estate investing space. And I think, a lot of what I've been talking about on social and of course on the podcast here is identifying where you are from an income perspective, how much then you can devote, what percentage of that you can devote to investing related activities, and then really, no pun intended here, but pull the trigger on a couple of things that make sense to you. You have a very deep understanding of mortgage notes and buying notes and selling notes and becoming the bank. Can you give me a little background on that and how one kind of goes down this process and what it really means to become a bank?
Well, one of the things I did early on, I've been doing this now since 2002, 2003. I really got involved in the mortgage crisis, the foreclosure crisis early on, when there was maybe 10 list tenants a week or 15 list tenants a week. where that escalated to 600 a week, to 1,000 a week here in Kane County, Illinois.
Yeah.
But through that process, I also got involved with non-performing notes through smaller banks. Got a reputation out there for taking distressed properties. And you remember that point in time, 2005, 6, and 7, a lot of the banks were trying to unload those non-performers because it frees up bank reserves and all things go with it. So I got my feet wet there and buying some one at a time, two at a time.
Yeah.
And then
I remember those days
and,
too. Like it was just tapes of notes, and like you didn't know what was good, what's not. Like you could sniff out. I know, Ray, you could sniff out like this was a real deal and this was just bogus and this was whatever. But man, I remember those days. Those were very, very interesting days.
And the upside downside is that there's so many of them.
Yes.
Early on, you could find that some still had equity in them. And then you could do a different strategy with that by doing second mortgages and buybacks and things of that nature.
Yeah.
But as time went on, everything was upside down. Then you got to figure out, okay, what do I do now? Either I rent it or try to negotiate a lower purchase price and things of that nature. But banks were in a position to really deal because they had so many of them, they didn't know where to start. So you fast forward to 2014, 2015, we started looking at bulk purchases of non-performing notes.
Yeah.
In the 15, 20, $30 million range. And then our strategy there was to securitize them in the aftermath of actually buying them. And we're going to get some decent dollars, get returns, and get reform and all things go with it.
So walk this back for me real quick. For those of our newer investors out there that are watching the Think Realty podcast and listening to it for the first time, and they're thinking, okay, I've heard about flipping, I've heard about buying and holding single family rentals, and now you're introducing this concept of non-performing notes. Is there a performing note out there? Maybe like break that down, take 30 seconds to a minute, break down what a note is, and then what you mean by securitizing a note or a portfolio of notes.
Non-performing notes start on the minute that somebody defaults. So if you look at today's market, right now there's about 2 million it's 2 million who's in default that have mortgages. There's 55 million out in the marketplace. So when that defaults, unless penance is served, depending on what stage you're in or the time frame of that becomes an opportunity for a real estate investor. The goal is to go from non-performing to performing. And the model of 10 for real estate investors, what I've learned is that for every 10 non-performing notes, 6 you can get reperforming. 2 are going to do cash for keys, and 2 you're going to have to foreclose on. But at the same time, you can always sell those off too. So you always have to have an exit strategy.
Yes.
And one of the things that I look at is the more somebody understands about real estate, the more exit strategies they can create on any given investment opportunity.
Right. So you got the 10. So you said this is the model of 10, right? Or the rule of 10. 6 out of if I'm to purchase 10 non-performing notes, 6 out of the 10 I can reperform, which means I can work with the individual that's paying on the notes, the payer, and work with him, work with her, and get them in a position where they're reperforming. Correct. What are the other 2 buckets again?
The other 2 buckets are cash for keys. So people just want to walk away.
Yeah.
Give them some money, let them walk away. And the other 2, I call them a little bit more stubborn. They don't want to move. They don't want cash for key. So you have to actually finish the foreclosure that the original bank started.
Gotcha. That makes sense. So, and like you said, you got to have exit strategies for every single one, which is always a really smart thing to do. In each case, in each of these 3 buckets, you got the 6, the 2, and the 2. What are the best case exit strategies for me, the investor, on non-performing notes?
And to get a reperforming, as you stated, is to work with the buyer, the homeowner.
Yes.
Help them. The difference between a private individual or a private bank versus a traditional institution is we have more flexibility. We have ways to help them that they couldn't be helped before. And also, I believe that because of being small, we also have the ability to talk to them directly, working with the servicer and some other things that are in place. On the So you want to get them reperforming by reducing their principal, reduce interest rates, restarting the transaction all over again, which is always a possibility. And then on the two for cash for keys, what do I want to do there? And here's the thing that when we talk about the nucleus, we talk about becoming the bank. As the bank, any real estate investor is looking for a couple things, looking for fix and flip, and they're also looking for wholesaling. Well, or rentals. So the two that do cash for keys, I could do all three of those strategies, implement each one depending on the property.
Yeah, that's right.
Rent it, flip it, wholesale it, and move it through its various paces.
Yeah.
And if I'm an investor today, knowing REOs are small or non-existent in my marketplace, then what I can do there is become self-sufficient and become that flipper, wholesaler, holder by buying notes. And we know that notes are going to increase over time as we go through 2020, 2021.
No, that's right. So, I mean, I look at the note market, and I was just kind of thinking about this. I'm like, okay, when I look at the note market, it kind of seems like I would want notes as well as rentals, as well as maybe a small little flipping operation in my overall portfolio. When I get the capital gains, I can maybe throw it in a note purchase, whether it's a performing note, non-performing note, and then obviously buy rentals, 1 to 4 units, and then maybe scale up from there. When I'm looking at a note, what should I be looking at specifically? Do you have like a formula that you use, or do you have some type of due diligence checklist that you use? Like, okay, I need to look at first position lien, second position lien, on UPB, the unpaid balance, the rate, what the overall situation is. How do you know which one's a good one, which one's a bad one?
Well, what I'm looking at is the formula that we use is, and I also want to make sure the investor understands this. They're buying paper. They're not buying the property.
Yes.
So when you're buying paper, you look at it differently than trying to inspect the property, see if you're going to make money on it or not. On the paper side, I'm looking for anywhere between $150,000 to $200,000 unpaid balance.
Okay.
Because the unpaid balance versus the market value, two different numbers, and I'm going to buy off the unpaid balance, never the market value number, because you always want to pay more. On the unpaid balance, let's say it's 150, then I'm looking for whether it's conventional, VA or FHA, and because you have different rules that you have to comply with when you're working with the consumer.
Yes.
In VA or any HUD or GSC type note, there's more resistance for you just trying to get the person out of the house. And in the past, a lot of investors always say, I'm going to buy these notes, I'm going to kick everybody out and have all my REOs. Well, in today's environment, you can't do that.
Right.
You can't do that with the So we have an opportunity as investors to help people and at the same time grow our business by the other means we want to. So it's UPB, what I can buy it for, what market I'm going to be in. If I'm in the Midwest, I could probably get a better discount than I could if I'm in New York, Florida, Arizona, California, all the key diamond states. So I'm looking for bulk. I'm looking for discounts and interest rates. They're going to vary right now. I see them as high as 6. If I'm buying a contract for deed, I can see them as high as 10.
Okay.
And we know that on the reperforming side, Abhi, when they restart, it starts all over again. The rules of 78s kick in. That's where you make your most money as an investor.
Should I always be looking at buying at a discount? Because I know there's some coaches out there will say, well, you shouldn't worry about that necessarily. You shouldn't that doesn't really matter. There's some that will say, well, you kind of do need to buy at a discount. So if I am buying at a discount, what percentage off am I looking for? 10% off UPB? Am I looking at 50? Or is it just what I can negotiate?
What you can negotiate, number one, for ourselves, and one of the things that I coach on is look between that 55 and 70% LTV on the UPB.
Okay.
So 100,000, I'm looking for 70, 50, 55,000.
Got it.
And the reason is that the base value never changes, as you know.
Yeah.
So once that base value is there, if I need to sell it for whatever reason, I can once I did my work, especially reperforming, I do 6, and I do that a number of months in a row. Now I have 20. I can sell that reperforming note to another investor at 85, 90 cents on the dollar.
That's right.
That's right.
Geez. We need to have this reperforming, like how the reperforming steps that you take, and probably do this like more in-depth analysis on that, because there are a lot of folks like me that also want to learn that process, and I think that would be really helpful. So we're running out of time, unfortunately. If you could leave us with one thought or maybe one idea with notes, what would it be?
I think the thought I would leave is become the bank. You become the bank, you control your whole environment with wholesaling, holding, flipping, and then also long-term cash growth by the reperforming. If you decide to keep them, you're always going to make money.
That's right. And you can become the bank initially by wholesaling property, by getting involved in the flipping game, or just by working a little more and saving some more money in this investing bucket that you have, to then lend it out and purchase these performing or non-performing notes. So you definitely want to get in touch with Ray. My good friend Ray, he's an expert when it comes to notes and really understands the market and how to kind of move and groove with what's going on. Ray, what's your contact information, website, email address, phone number if you want to give it out? Now's the time.
The web address is www.ptteltd.com. Telephone number is 630-429-4025. And my email address is ray@pullthetriggerenterprises.com.
Awesome. Ray, thanks so much, man. You're the greatest. I certainly appreciate the insights and kind of learning a little more about that non-performing note industry from you. I mean, there's a lot that we can do to reperform some of these non-performing notes. And like Ray said, you can make a lot of money there. All right. Don't go anywhere. We'll be right back. This segment is brought to you by Narada Real Estate Investments, your premier source for cash flow investment property. Visit www.turnkeyrealestateinvestments.com. So let's talk about a recent article on thinkrealty.com from Adam Data Solutions. There's a new Adam Data Solutions report out saying that flipping rates have surged as profits have dropped tremendously. And I'm sure you're seeing this in your area where there's a lot of competition. And guess what? The prices for materials, I've been talking about this even when we were doing the radio show, right? They've been increasing. They're an all-time high. The cost of labor, increasing, now at an all-time high. So what does this do to profit margins? Well, it's going to compress them. And that's exactly what this report shows. So real estate analytics from Adam Data Solutions found that fix and flip deals represented 7.2% of all home sales during the first quarter, the highest rate since the winter of 2010. All right, let's keep reading here. In the first quarter of 2019, that's what Adam Data found. And Adam also noted that the gross profits have fallen. Investors where homes flipped in the first quarter of 2019 saw an average gross profit of about $60,000, which is a dip of about 12%. I'm kind of doing some mental math here, which is a dip of about 12% from an average gross flipping profit of $62,000 in the previous quarter. That margin is also down from $68,000. So maybe this is a trend that we should be paying attention to. In this report, we take a look at a city called Memphis, Tennessee, and it's atop the U.S. flipping charts with a 13% home flipping rate, okay? And that's according to Adam Data Solutions. That's up 10%, so we're seeing that increase in rate of homes that are flipped. And we're also looking at Huntsville, Alabama, Phoenix, Arizona, and followed up with Memphis with an 11.4% flipping rate, followed by Atlantic City, New Jersey at 11.1%, Las Vegas at 10.9%, Durham, North Carolina at 10.6%, and Raleigh, North Carolina at 10.3%. In total, Adam Data Solutions found that 85 out of 138 metro areas analyzed in the report posted a year-over-year increase in the home flipping rate. And that includes Columbus, Georgia, which is kind of interesting, which is up 83%. Okay, which is up 83%. Maybe this is because of all the secondary markets now, right? We're looking at Columbus, Georgia, Raleigh, North Carolina. Charlotte, necessarily not a secondary market. I'm considering it more of a primary market. But Charlotte, North Carolina is up 65%. So even though flipping rates are up, profit margins are down. The annual percentage rate in gross returns has declined in every metro area in the top 10 with the exception of Clarksville, Tennessee. What does that tell you? Maybe start looking at some of these tertiary markets for opportunity. This segment is brought to you by Real Property Management, which is the largest real estate residential property management franchise in North America, managing tens of thousands of properties for individuals, investors, and institutions throughout the country. Learn more at realpropertymgt.com or call 888-806-7088. So as a real estate investor, how do you find an investor-friendly agent? Do you just call them and say, well, hey, can you just run comps like for the last 20 properties that I've sent you in an email? I highly doubt that's a good relationship building effort, people. We have to be very interested in how we can help the agent and how they can help us. You also want to pay attention to a couple of things. My good friend Mark Ferguson recently wrote an article for Forbes where he talks about a couple of things that we should be paying attention to gauge whether or not a real estate agent is worth working with. Number one, do they show up on time, or do they answer their phone? Or do they just do everything on text message? And I kind of agree with that. If you're going to set a time, be there on time. Otherwise, why are you even in business? So that's one thing I would be looking at. Number two, if I do call somebody, will they return the phone calls promptly? Or do they just kind of say, well, I'm going to let it slide and get back to you next week? What kind of systems do they have in place for follow-up? Number three, do they know their market values? There are a lot of real estate agents out there that don't know their market values. And then guess what happens to their comps? Just beat myself with in the head with an iPad. Those comps are just bad comps. So how well does this real estate agent know the market? Next, are they able to meet or show the houses quickly? If I'm working with an agent and I want to say wholesale deals and maybe the agent can list them, are they able to move my properties quickly? Yes, no, maybe. If they are, this tells me this agent is motivated. If they can't, then maybe this agent is new and needs a little more practice, or the agent just doesn't care. Is the agent working full-time and doing something else and has this business as being an agent part-time or maybe less than part-time? That would be a little bit of a concern as well. So really vet out your agents, take them out to lunch, take them out to coffee, build that relationship, and that's how you win. Think Realty Nation, that's the show. I learned a lot about distressed notes, more specifically non-performing notes, and how we can kind of reperform those, and then that model of 10. So if you missed that, you definitely want to listen to this interview with Ray. It's super, super important that you start to understand how notes can factor in to your overall investing strategy. Super, super cool. We also talked about the rate at which homes are being flipped, always on a rise right now, and how prices, your profit is dropping. Not prices, how your profits are dropping. So keep an eye on that as a trend, as a leading indicator. And we also talked about finding an investor-friendly real estate agent. So got any questions for me, get in touch. You can find me anywhere on social media. I'm a huge fan of LinkedIn and a huge fan of Instagram right now. So ask me your question, and I'm happy to answer it right here on the Think Realty podcast. You can also check out thinkrealty.com for additional resources. This podcast is brought to you by Roofstock. If you're ready to buy your next investment property, then check out Roofstock, the #1 marketplace for buying and selling single-family rental homes. Featuring tenant-occupied rental properties for sale in over 20 states, Roofstock makes it easy to invest in cash-flowing real estate outside your local market. And to help you invest remotely with confidence, all properties are backed by Roofstock's industry-leading 30-day money-back guarantee. Sign up for free today to find your next cash-flowing rental property at roofstock.com/thinkrealty. Think Realty Nation, that's a wrap. Get in touch, and until next time, happy investing.